So the goal at AR trading is to get you guys accustomed to a lot of the financial jargon that you see people talk about. What that means is, well, let me give you some backstory first. A few years ago, when we were starting to get into trading, into the stock market, into finance and economics, we watched videos on videos on videos, hours and hours of research, and eventually our knowledge of the world of economics and the economy grew, right? And now we become successful traders. And obviously that can seem a bit daunting. And it is actually because the amount of time you have to put into it is a lot, okay? And one of the problems that we encountered along the way was that when we were watching videos or looking things up, for example, like how do you invest or what is an option, what is forex, right? A lot of the terms that people use to describe these things were just unfamiliar to us. So in our seeking what we don't know, we ended up coming across things that we didn't know too, and we ended up almost rabbit holing ourselves. And sometimes it would lead to unproductivity. Our goal is to give a very, very layman terms, a very simple explanation as if I was there with you, with the viewers, right by your side, just a walkthrough of how stuff works. In these first videos, we're going to be talking about the very basics, okay? Like, what is stock market? What are brokerages? How do you trade? What are options? And we'll go more in depth as the videos continue. Okay, and also we're still figuring out the format of it, but yeah. So let's say that you are an average person, right? Maybe all you know about the stock market is that if you invest in a company and it goes up, you make money, it goes down, you lose money, okay? That's basically all you know. Okay. Now, you obviously want to track your stocks, right? You want to know what they're doing, right? So how do you look at the stock market, right? Like stock market, I'm sure everyone knows what that is, but how do you look at it? And there are different ways to do it. Some people like to use Yahoo Finance, right? And this is a one way that where you can see, here we go, S&P, Dow, Nasdaq, Russell. Okay, these you see right here. These little graph thingies. These are just a bunch of different stocks or different companies, right? And if I were to click on any one of them, I get all the information about them. This is their graph, etc., etc. And at some point, I want to mention this. At some point, looking at this screen right now, you'll be able to know exactly what's going on. Okay? Maybe not now, but you will eventually. Okay. So the website that I like to use, that I found very helpful, is called TradingView. Okay? TradingView.com. So, what do we have here? What we have here is the home menu, and it automatically gives us the S&P 500 index, the Nasdaq 100, and the volatility S&P 500. Okay, so these are different companies. They're not companies. Sorry about that. I just want to make that clear. You can trade companies, you can trade ETFs, and you can trade a lot of different things, but we're not going to focus on that right now. Okay, ignore these for now. You'll know what an index is and what the S&P 500 is. Okay, so just for some background, the S&P 500 is the 500. Think about it like as if the 500 biggest companies all in one. That makes sense. So, for example, like name off the top of my head, Apple, Microsoft, Tesla, Lucid, right? Big companies. And essentially it tracks like it's almost like the average of their movements. It's not adding their individual prices up, it's tracking their movements. Right? So let's see. S&P 500, it's ticker, right? It's ticker as in these three letters. These are the ones that represent it. SPX stands for the S&P 500. TSLA stands for Tesla. MSFT, Microsoft, okay? Let's press the launch chart, and what do we see? Okay. So this is not what your graph is going to look like when you first open it, okay? This is my personalized graph with my trend lines, with my colors, everything like that, okay? Yours will look a lot more basic. I think it'll look green and red and with a different color backline, okay? So what do we see here? Okay, there's a lot of stuff going on this screen, okay? A lot of stuff. Let's start from the top left over here. So just for a quick overview, these are tools that you can use to analyze what's going on, okay? You can You can put text for yourself. So if I were to say, I don't know, hello or anything, right? Just notes for myself. I put them here. If I want to draw something or where I thought it'd be going, I do like that. If I want to draw lines, I do like that. And yeah, this is also a graph of the 1M, the 1 minute, okay? This is the graph of the 1 minute, which means that every single of these bars you see here, and we'll talk about these bars later too, these bars are 1 minute in this day. Today is the May 16th of 2023. And if you look down here, if you look at the bottom of my screen right now, you'll see 2/16 May 23, 1408, 1409. It tracks it minute by minute. This is the S&P 500's minute by minute movement today. Okay, if I were to zoom out to the 1 day, oh, sorry about that, to the 1 day, you'd see all this stuff. This is from back in 2021. You see COVID hit around here, you know what I mean? Yeah, this is COVID hit here, started climbing back up, and then now we're on this downtrend. Yeah. And again, you know what all this stuff means. It just seems like a lot of information to process. I know it does, and I encountered the same problems. Okay, now that we have an idea of, let's say you're looking at Microsoft, right? Now that let's say you want to trade at Microsoft, right? You have an idea of how stuff works, right? Let's say you've gotten on your computer and you've opened up TradingView and you've gone to Microsoft, right? Now what? Now it's time to talk about what an option. No, you know what? Yeah, an option is. So what is an option? An option is how traders make money, okay? Technically. What's the difference between an option and investing, okay? Investing means you're investing money into the company, hoping it does well. If it does well, you make money, obviously, right? An option is so different, okay? Let's look up what is an option in stocks, okay? An option is the right to buy a stock or other asset at a specific price by a specific time. Stock options trade on public exchange, blah, blah, blah. Fixed life, blah, blah, blah. Expiration date, blah, blah, blah. When I looked this up, it didn't make sense. I'm going to be so honest with you. What does this mean? The right to buy a stock at a specified price by a specified time. This means, let's just say I'm over here, right? Let's say I was trading, remember these words, okay? You're trading options of a stock. Trading options of Tesla, of Microsoft, right? Each stock has their own set options with own properties, but we'll get more into it later, okay? This video, I just want to focus on what an option is, okay? So there are two kinds of options, okay? There's a call, I'll even write it here, and there's a put, okay? A call is you're calling it. You're saying, you know what? I think it's going to go up, okay? A put is I think it's going to go down. Very simple, right? So let's say the stock, so right now the stock is at this price, okay? This is the very latest, right? And obviously you might be asking, why are these so small compared to these? And you'll see why later in future videos, okay? So if I were to place a call right here and it went up, I'd make money. Down, I lose money. The difference between investing and options is the risk, okay? The risk. Let's say this price right now is 311.6 where my cursor is right now, okay? That shows you what price it's at. Let's say like right here, for example. Now, I'm not sure what the difference between 311.6 and 312.80 is, but I'd estimate it's approximately, I'm just guessing, 0.3%, okay? So if you put in $100 right now, and it went all the way up till here, and you wanted to sell and take your profits over here, you'd be making 0.3% off 100. So that equates to about 30 cents, right? $0.3. An option is different. An option, depending on what kind of option you have. Let's say you take the risky options, right? Options give you the right to buy when the price is over here. Normally people will buy the stock up here for the price that they see, right? 312.80. An option is when you're all the way back here and you're saying when the stock, if the stock ever reaches this point in time, I will buy it at that point in time for this price. I will buy it at this 312 for 311. Right? Okay, let me say it again. Imagine you have a book. Okay, the book is worth $100 right now, okay? You're wanting to buy it, right? So you set an option. You have the right to buy the book now when it gets more expensive. When it becomes more in value, you're telling the guy, "Yo, I want to buy your book, not right now, but I want to buy the right to buy the book when it's at a higher price." So when the price is at 312.8, I won't be buying it for 312.8, I'll be buying it for 311.6. Okay? Now, I just want to say, you might be asking, why can't people just do that all the time? They just say, "Okay, I'm going to buy it here," and just, say, "I'm going to hope it goes up here. I'm just going to hold it forever until it crosses this line." You can, but the longer you hold it onto for, the more money you lose. And we'll get into that later, of course, okay? So, likewise, if your option goes up till here, and let's say you put $100 into that option, you're probably making around, depending on how much you put in. So say you put 100, you probably make around $50, $60, okay? And this number is not based on anything but just to provide a sense of how different 30 cents is versus how much an option gives you, okay? This number is totally made up by me just now. It depends so much on what kind, on the strike prices. And like I said, I'm not going to throw any jargon at you. I'm just going to explain as I go along. I will get into strike prices, time decay, and all that stuff later, okay? The point is you'll make a lot more money, but you can also lose a lot more money, okay? Let's say this gap is like $1.50, right? If you were to go down $1.50 here, you'd also lose $50 if it were to go down here. So you're still hoping it goes the way that you want it to go, but there's just a lot more risk involved, okay? That's the biggest thing right now. And so like I said, a call is when you think it goes up, and this is a put when it goes down. Now you can also bet that it's going to go down. You can also say, "I think it will go down." Now you're instead of buying the right to, now you might be asking, right? Okay, so now you're buying the stock at a lower price than what it was when you bought it. Aren't you losing money? Right? And yes, you can think about it like that. I will explain this in future videos, okay? There are different, you can sell and buy puts and calls, and just kind of conceptualizing them is very difficult to understand. But I just want to give you just a definition, because this is a very flaky, hazy definition. Okay? So if you put, right, if you call it goes up, you're good. If you put goes down, you're good. A put is just the opposite of what a call is. Now you're betting it's going down. If it goes down, you make a lot of money. Okay? And that will be it for this video. I just want to provide you a very, 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 very basic idea of what an option is. Thank you.